All right. Thank you guys for coming out tonight. It is a Sunday. Uh, I'm super excited to start this session with you guys. I have a lot of trading gold information for you that I want to share. And a lot of people have been giving me ideas of what to talk about for this session. So let's get started and we'll talk about the agenda that we're going to go over. So, first thing we're going to talk about finding A plus fair value gaps. I know a lot of you guys want to know how my main edge works, what I trade off of, sort of that thing. And then we're going to go over knowing how and when to scale in and out of a position, how I enter my position, how I scale out of it, controlling your size, getting 1/3 of your position, one half your position, etc. And then for third, we're going to be going over controlling your emotions and your patience, especially when playing off of fair value gaps, and we'll go more in depth with that when we actually get to that section. And then we're going to be going over the 7 principles of consistency, my top 7 things that you're going to have to follow and the rules that I set for myself that creates me to be a consistent, profitable trader. And then at the end, we'll do a Q&A session. So let's get into the first thing, which is fair value gaps. So what exactly is a fair value gap? Like, why do I trade it? So fair value gaps are impulse movements that create an imbalance in price that leave unfilled orders in that area. They're popular because after one is created, we often observe price returning to these orders and filling them. So fair value gaps are created by a 3-candle structure, and I'll give an example right here. This is what a fair value gap would look like. This is a 5-minute chart on ES. You can see we have a very big impulse move to the upside, and we go from our previous wick to our next wick. So you can see that this whole zone that was created right here is just created by this single body of the candle, right? But if you look at up here or any other candle here, you can see that there's no real gap that's created because the wick comes up, the wick comes down. So these are the things that we want to watch for. So you go from the previous top wick to the next bottom wick, and this is where you create your gap that we want to play off of, right? And you can see we come right back down, right back into this fair value gap here, and then we automatically bounce to make new highs. So this is one example of what a fair value gap looks like. Some other ones. This is on a 1-minute chart on ES as well. You can see we have a nice strong push up on this 1-minute candle right here. We create this fair value gap to the upside. We come back, have a nice bottoming formation. We bounce right off of this fair value gap, and we end up pushing up to the upside. Another one is also created on this trend. Push up, we create this fair value gap that we end up holding really nicely on 2 bounces, right? We come in, buyers instantly buy this up off this fair value gap. We come into it one more time, and then this instantly gets bought up once again for us to push to new highs as well. So let's go into some more in-depth and market structure ways to play fair value gaps, and I'll show you exactly how I talk about this and what do I mean by market structure. And a lot of the trades that I like to trade off of are a lot of ICT concepts, and we'll go over that more in the future as well. So this was I think Wednesday last week, and price action that formed today was really interesting, and it pretty much followed perfect ICT concepts, and we'll talk about it right here. So we have this strong push to the upside. The first 10 minutes of the market have a little bit of weakness. We come up, wick rejects, and then we start selling off, right? Nothing really forms here. Nothing's forming really. And we come up, and we create this fair value gap to the downside. So market structure, we understand market structure. We know we're making lower highs. Sorry. So we know that lower highs is indicating that we're in a bear trend. So what are we going to look for an entry to possibly get short here? And that is going to be right here. We have this strong impulse move to the downside. We create this fair value gap. We go from the previous bottom of the wick to the next top of the wick, right? We have this fair value gap here. And as you can see, we push right into this zone and automatically get sold off to the downside and end up breaking this sell side liquidity. So if I was going to take this short here, my price target would be the bottom of this wick here because it needs to be able to take out sell side liquidity for us to then potentially bounce to the upside.
Yo, Justin,
Yeah, what's up, man?
what time frame is this on?
This is on a 5-minute chart.
Okay, because sometimes fair value gaps get made really early on, and I don't know how long to wait. Because if it goes in right after it's formed, I don't know if I'm entering too early or too late, or like, you know what I'm saying?
Yeah, I get you. So we're going to go more in depth into that in confirmations later on. So the one thing we want to watch is sell side liquidity get taken out, right? So we come down. This is a nice sell pressure that gets formed here off of this fair value gap, and we have a nice strong push to the downside that ends up creating another fair value gap with this big candle here in this move to the downside, right? So we go from the previous wick to the next wick right here, and we create this big fair value gap. As you can see, there's not a lot of movement or clear entries here to the downside. But what I'm watching here and what I look for is, as you can see, we come up here on this first candle, have a nice rejection, don't end up breaking the sell side liquidity yet, right? So this is still intact. We have another push to the upside, still inside of our zone. Have a nice wick here. This is a super weak candle close. And then the sellers automatically come in and break this sell side liquidity. So look, we end up pushing a little bit below this, but that's all institutions need to have that sell side liquidity get taken out. So we push up just a little bit, a couple, maybe a 25-cent move under this tick right here. Sell side liquidity gets broken and pushes up, and we end up breaking this high and breaking out of this fair value gap. And one thing I love to preach and I love to play off of as well is fair value gaps will turn into areas of confluence once they're broken through. And that's exactly what happens right here. You can see we have this fair value gap that now pushes over into this area, and as soon as we break above this area and come back to touch this fair value gap, you can see that to a T, we bounce perfectly off of this fair value gap that was created from over here. So now we have market structure still in a bearish move. So what are we aiming for here? If we enter into a long position here on the retest here, we want to first see us break this buy side liquidity and then automatically come up and break the actual buy side liquidity on our 5-minute chart. Another thing is created is once we push up here, 5-minute chart, another fair value gap is created. And this is a perfect long for a market structure. As you can see, we have a high here, high here, high here. We have a nice resistance point that we want to see a breakout from. We got our bounce entry from this old fair value gap. We come up and we end up breaking through this level. So now we're looking for a potential long entry or a retest of this level for us to get long. And we created a fair value gap along the way to the upside. So this is a perfect long entry to then go up and break this buy side liquidity here. So the perfect entry would be right here for us to take a long position and automatically push up into this buy side liquidity that gets taken out. So this is a nice market structure of what to look for when looking at fair value gaps. So let's look at another example. This is another example. This is NQ 1-minute chart. This is the exact play that we took on, I'm not sure, this was on the 27th. So this is a trade that we took, this exact short on NQ. And I'll show you guys what I'm watching for here. So the first thing I was watching at open is I wanted to see this buy side liquidity get touched or taken out. You can see we had a nice push to the downside, come up, and we touch buy side liquidity perfectly. Instantly gets sold off though. So now we have a break of structure. We're breaking these wicks to the downside, right? And now we're starting to sell off. What I'm looking at as well is these topping tails, right? These wicks push up, instantly get rejected. These wicks push up, instantly get rejected. Another wick push up, instantly gets rejected. So now I'm watching for a potential short entry. And on the 1-minute chart, we have this fair value gap that has been formed to the downside. So I'm watching for a retest of this zone for me to get into a short position. We push up, I enter in short right here, aiming to take out sell side liquidity at this bottom of this candle here. We end up getting a nice push to the downside and automatically break this sell side liquidity, and our price target is now hit. So the next thing that we're looking at is this another fair value gap that was created on the downside, right? So we want to look at these moves and take advantage of these while the chart is playing out in front of us. That's why most of my trades that I take are around 30 to 45 minutes after the opening bell, because I want to see price action form and I want to see these fair value gaps be made before I enter a trade, right? So we get this fair value gap that's formed to this downside here. We come up, we have 1, 2, 3 wicks of a rejection here. Come down, fail to break this sell side liquidity here, right? We barely touch it here. So now this is still play, right? We haven't broken the sell side liquidity, so we can't bounce to the upside yet. We bounce here, fail to make a new high, another rejection, another short opportunity. Bounce up, again, still failing to break this fair value gap here. We're still holding this fair value gap, another short opportunity to the downside. And then we finally break this sell side liquidity. So now we have a break of structure. Sell side liquidity gets broken, and we automatically bounce to the upside. So now I would be switching my bias to longs, and I want to be looking at areas where I can potentially see a long. And the thing that I'm noticing here is right when we break lows, normally we'd expect some kind of breakout, right? When you see a level that's being broken, you normally expect volume to start kicking in and for it to eventually go lower. But we see the exact opposite here. We see sell side liquidity get broken and buy volume get pushed up right back into this fair value gap area. So on the way up, we see this 1 minute fair value gap that's created, right? So what do you think happens, right? Sell side liquidity gets taken out. Market structure is now flipped. We have buyers stepping into the market after sell side liquidity is broken. This is a perfect smart money ICT entry right here. We come back into this 1 minute fair value gap for a long entry, targeting the top of buy side liquidity. So you're only risking a 11620 entry to a 11610 stop loss around. So you're risking 10 to make up to 11724. This is exactly the type of trade that you want to take. You're taking super tight risk entries when you're tight stop loss, so you're risking a very minimal amount to make a large amount of money. Those are high quality setups that you want to take. And as you can see here, we have a lot of rejections that come from this area. We automatically start to see strong buying come in right after we bounce off this fair value gap. So we end up pushing up. We create a gap to the upside, but this is now going to stay unfilled. Some gaps will not be filled. We come up, have a super strong impulse buy, another fair value gap filled. We come back. Once we break buy side liquidity, we hold here, have a nice strong push, and we end up having a nice strong push to the upside after this fair value gap gets bought. So this is another really great market structure to study and look back on to see how we could have played these, right? So how are we going to play these fair value gaps, right? What do I look for when I'm actually looking in front of the charts right in my face? I have my fair value gap on my screen. What is the reason for me actually entering these trades? So my biggest thing is I always going to say wait for confirmation. What does that mean though? There's a lot of things that are going to confirm me to get into a trade, whether that be buy and sell volume starts kicking in, candlestick formations, right? I want to see what the candles look like in a sense of, is it a structure break? How weak or how strong is the price action? And I also want to look at NQ and ES. If for those who have been in the live sessions, you know that I always look back and forth of NQ and ES, and I want to see how they're conflicting against each other, right? I want to see which one's stronger, which one's weaker. Are both price structures working off of each other, right? Those are the things you would want to notice. So we'll go more in depth with that, and I'll show you why and how I look at that. This goes back to another trade that we took on that exact same chart on this chart right here. This is this trade right here that we played off of. We have this 1 minute that is formed. We have this 1 minute fair value gap. We come in, and this is what I see when I want to wait for a confirmation. So I want to play a short position on this fair value gap, right? So what I want to see is normally when I first enter a fair value gap, I'm going to enter lower size. I'm not entering in my full position. Let's say I enter maybe 1/3 or half of my position size. For this example, I entered half of my position size. Once we first enter the zone, I enter in one contract, short position. I enter in one or two contracts. Once I see more confirmation, which is this wick right here, we push up, fail to hold. We push up again, break this wick, which is even more weak, fail to hold again. Once I see this candle break this wick right here, this is now a break of structure to the downside once we reject this 5 minute zone. I then enter in my full position right here on the break, and we have a nice push to the downside. This was a beautiful, beautiful trade. This is what I'm looking for when I look for confirmation or a sense of price action weakness. You guys, over time, a lot of new traders, you're going to be able to look at price action and think of it like a second language. You're going to be able to read strength versus weakness super, super easily, right? Being able to understand the candlesticks and being able to understand the wicks and bodies of a candle is going to identify your edge and make you be a lot more it's going to make you be more confident in your plays. When I see this type of price action and these types of wicks, this is showing me a clear sign of a rejection of this zone. This is what I want to see when I'm entering. I don't just want to enter my full position without any realization. So that's why if I'm going to enter in on the first touch, I enter in light size, guys. So if I do get stopped out, I'm stopping out on a super small size And that's why my losses are going to be very small. Let's go to another example. This is another chart on the 1 minute. And this is multiple things that we're watching for, right? Let's go over everything. We have our buy side liquidity up top here. And we have a break of structure to the downside that creates this 1 minute fair value gap, right? We have another push to the downside, another push to the downside, and we have another fair value gap that's created right here. We end up pushing up, and we have a nice rejection of this, right? So now what do we want to look for, right? What is our price target when we're playing these fair value gaps? We want to play with the trend. Fair value gaps are an area where you can get discounted entries for your position to follow the trend. Right now, we're in a bear trend, right? We're making lower highs, and we're breaking lower lows. So we're targeting this sell side liquidity here at the bottom of this wick. We come up. Once we see this big rejection of this level here, this wick pulls back, and you enter short right here with a tight stop above this wick. Sellers come in, boom, sell side liquidity gets taken out. You sell your position once sell side liquidity gets taken out. We end up bouncing here, coming up one more time in this fair value gap. Again, what are we looking for? We're looking for signs of weak price action. Look at this. 1, 2, 3. Perfect 3-wick formation that is showing us a clear sign of a rejection here. Sellers come in once again, and boom, take out sell side liquidity here at the bottom of these wicks. That is your price target. So you're risking here to the wick from your entry to all the way to the bottom of the sell side liquidity. This is why you need to be able to understand risk to reward and being able to understand why your risk has to be tight. I know traders that have an 80% win rate and they're unprofitable. I know traders that have a 30% win rate and they're profitable. Why? How is that possible? Because the risk to reward that they take are so important. They take way bigger wins than their losses. Their losses are nothing compared to their wins because they're following tight risk management and their risk to reward is always huge. This is a prime.
Question real quick.
Yeah, what's up?
So, based on like equal lows and liquidity, would you say liquidity's taken as long as the wicks are broken through, even if it's a really small wick, like the one you
Yes,
just showed?
yes,
like
yes,
it goes
yes,
to
yes.
The tiniest wick
Yep,
ever.
yep,
You'll
yep,
still
yep.
say that's liquidity?
Absolutely, absolutely. If it touches your level or breaks it in the slightest, it is still a break of liquidity. It is still a break of liquidity. That is all institutions need for them to get into an order. Right when you see
Also,
that, yeah, what's up?
really quick, does the micro and the E mini move the same way?
Yes, they're just different contract
Okay.
sizes. You're still looking at ES. Micros are just $50 and minis are going to be 500, depending on if you're that's just for ES though. So let's look back into this, right?
Justin, quick question.
What's up, brother?
What would you say that the percentages of these fair value gaps that you're showing us work on these charts as opposed from 1 to 100%?
I'm not sure, but it's a good question, and the way I want to respond to that is if you're playing them correctly, it should be very high. And what I mean by that is if you are strictly waiting for confirmation and not just trading every single fair value gap that you see, then it'll be very high. Because there's going to be a lot of fair value gaps that are going to show up on your charts, but it takes a lot of time and experience to understand which ones are the right ones to play and being patient to wait for your specific confirmation to actually play those. So let's look at this right here. We have our 1 minute fair value gap here that we created to the downside. We come up, again, right, we want to see some kind of rejection. We see this next candle come in, and this is where our entry is, right? We see strong selling pressure come in. We set a tight stop loss at the top of this wick here and aim for the bottom of the sell side liquidity, which is right here. We then hit the sell side liquidity, come back up. Again, stop has not been triggered yet, and we end up breaking out and having a strong push to the downside, right? Guys, sell your half of your position or a decent amount of your position at sell side liquidity and let the rest of it run with a trailing stop loss. This is how you're going to catch bigger moves and let your runners run more than your losses, right? Once we have another strong push to the downside, fair value gap will be created. you're going to get another position or another chance to enter a short position here. So we break sell side liquidity, have a nice push down. We have another sell side liquidity that's formed right here. We have this wick, and we have this fair value gap on the 1 minute that's created. We're looking for potential short entries. We bounce up, have our first position entry right here. Again, where this is going to be 1/3 of our position. This is not a full position here. We want to see more confirmation. We have a little bit of a sell-off. We come back in the zone. Again, the top of the zone has not been broken yet. And then right when we see selling pressure come in again, this is more signs for me to get back into some short positions. So I add more. I add to my full position. And then boom, sellers come in strong, automatically break sell side, and automatically break 5-minute sell side liquidity right here. This is a great.
Justin,
Yeah, what's up?
let's see. For that fair value gap at the top, like that, the highest one, it only tested it once. So would you go in with a lighter position?
Yes, I would. But the thing is though, is it doesn't have to be tested multiple times for it to be valid. Every fair value gap is going to be different. I can enter my full size right here because of how tight my stop loss is. Since I see this big candle with downside here, I can enter full position size right here with a tight stop, and I'm fine with risking this because my loss is going to be small compared to how much I'm going to win.
Would you be fully confident with that trade? Because isn't it going towards that buy side liquidity with the blue line at the top? Isn't it? Wouldn't you be looking for it to reach that and then come down? How would you know it?
Yeah, that's a good question. It's a good question. So you don't.
Okay. Yeah.
Guys, that's one thing I want to go over too, which I was gonna do it in this one, but I decided to move it to another session. Is guys, you have to realize in trading, anything can happen. Literally anything. Like nothing is certain in the market. That's why you have to have good risk management. Because I'm gonna enter in something I think has a high probability, but that does not mean it's 100% gonna work out for me. There is not a single play that you can ever take that is going to be 100% going to work. You find what works for you. That is what an edge is. When somebody says you have an edge in the market, it is something that you are confident in, something that gives you an advantage over somebody else in the market. My edge just happens to be based off of fair value gaps in market structure and order flow. So your question, right? It's a good question. Absolutely. We could definitely come up and break this buy side liquidity here for sure. But I'm going to take advantage of my edge. And if I see a rejection of this 1 minute fair value gap, I'm going to enter short and follow my tight stop. If my tight stop gets stopped out, then yes, we'll come up and break sell side or buy side liquidity here. But I'm going to take advantage of my edge because it's being presented to me. I'm not going to second guess my edge because I know it works for me in the long run. And I know statistically, if I take every single trade that I see that I know I'm confident in, it'll end up working out in the long run. One trade does not mean anything. Yeah, one second. One trade does not mean anything. Start looking at trading as a bunch of singular trades all combined into one. Jot down all of your trades. Stop looking at just one trade you take a loss on or you take a win on. Look at the combination of 100 trades you take in 3 months. In 3 months, look at all of the trades you take. And then sort them into batches. Understand what your profitability is, right? Stop being don't let one losing trade get you emotionally, get you mentally. Just learn from it and move on. Look at it from a bigger perspective because trading is a longevity game. It doesn't matter if you have a bad day, it doesn't matter if you have a bad week. If you're green at the end of the month or you're green at the end of the year, that's all that matters. Learn from your mistakes and move on from them. Yeah, what were we talking about? What's your question?
All right, yeah. So it involves your fair value gaps, right? So do you put limit orders based on fibs ever, or do you strictly like, okay, it enters a fair value gap, and then you're just waiting for price action to see if it's good or not? Or
so I do enter off of fibs. I don't enter off of fibs every single time I trade a fair value gap, but I will enter off of fibs and I will add it for extra confirmation on my trades.
What are fibs?
But basically, you use fibs plus price action. Like if it enters the zone, if it starts to look.
Yes. Okay. Yeah. If a Fibonacci retracement is in the retracement I'm looking for and it matches up with a fair value gap, that's just adding more conviction onto my trade. And we'll go over Fibonacci retracements in a later session. So let's look at something else, right? How do I look at ES and NQ? So this is the same chart, right? This is the exact same chart we were looking at before. This is the NQ chart we were just looking at, and now we're looking at ES chart. How can I use these two things to take advantage of it and give me more conviction or more confidence onto my play? Like a question that was asked earlier is, how do I know what's going to give me, what's going to break, what's not going to break? And one of the biggest things I like to look at, and that gives me more confidence on my plays, is if NQ and ES are both aligning in my favor. Like this 1 minute fair value gap. He said, how do you know how to play this? Won't it end up breaking buy side liquidity? If we look at ES and NQ, they're both in areas of confluence here. ES, this is a 5 minute fair value gap. You can't see it on our 1 minute chart, but this is a 5 minute fair value gap here that we're constantly rejecting off of. We can see 1 wick, 2 wick, 3 wick. We fail to break above this level here. So this is giving me more confirmation to enter into a short position because ES and NQ are both in areas of confluence. Just like this fair value gap right here. Both of them are creating fair value gaps to the downside. Comes up, rejects. Same on ES, comes up, rejects. Another time, comes up, rejects this 1 minute fair value gap on NQ. Same thing on ES. We have 1, 2, 3. Multiple wicks that are showing me both ES and NQ are in correlation with each other. This is adding more conviction and more confidence onto my position. Same thing with this fair value gap right here. We have a 1 minute fair value gap formed on ES. We come up, break the structure, have nice sellers step in. Nice rejection here. Same thing on NQ. This is giving me more conviction. Both ES and NQ are acting as the exact same thing. This is giving me more confidence for my play. There's going to be some times where they're not going to line up. And that's where you know that those setups are going to be down in a little grade. You know, it might be a B setup or a C plus setup. But we're looking for A plus setups or A setups, right? Something that we're going to be confident in. And when we see NQ and ES aligning with both areas of confluence, these are things that we want to take advantage of and take note of. Now, a lot of these things are hard for me to explain in a live session. And I try my best to. I'm still trying to become the best mentor and best teacher I can possibly be. I want to understand from your perspective what I can teach better. But you get to a point after years of experience in thousands of hours of market time and just watching the charts where all of these things will align in your brain. And you don't really have to explain them. So I'm still learning to be able to realize these thoughts and portray them onto you guys live while we're live trading, right? But this will take time. Again, price action becomes a second language. You can understand strength and weakness over time. So let's go. How do you scale into a position using a fair value gap? So one thing I like to do is I enter in 1/3 of my position off of the first test. Your stop loss is tight. And if you get stopped, you're going to take a very small loss because you're in not your normal. You're in a super small position size. You're not in your normal position size. The more confirmation you have, you can add until you have your full position. And make sure to keep your risk tight and be patient when you're adding. Example, this is a 5 minute chart on ES. We want to have a short position here. You can see we broke the sell side liquidity. We're coming back up. We have a nice retracement here, and we have multiple rejections of this area. We have the 5 minute fair value gap that we're watching for. So let's go down to a 1 minute chart and see what it looks like. We have a rejection here of the wick. Another rejection of the wick, and then sellers start to come in here. Once I see sellers come in here, I'm entering short. Once I see a break of structure on the wick, I enter in my full position, targeting this sell side liquidity right here. So off of the first push here, I enter in lower size with a tight stop above this wick right here. Super tight stop. Then once I get more confirmation and I see a break of structure, which is a break of the bottom of this wick, and this next candle forms, that is my second entry, and that is where I enter my full position to the downside. You can see we come up, retest that same exact wick, automatically sells off, super strong selling pressure comes in, and we end up breaking this sell side here short term. Normally, I would sell most of my position here. I'd sell 3/4 of my position and have a trailing stop. Most of the time, this trailing stop would normally get stopped out from this next push up. But there's going to be times where if you trail your stop, this will get a longer move, right? Our job is to catch runners. We want to juice as much profit as possible without being greedy. We want to follow proper risk management, trying to catch those bigger moves. But again, we don't need those bigger moves. All we need is this little move right here to be profitable, and you can be done with your day and live your life. That's the way I look at it. I don't want to be in front of the screens for 8 hours every day trying to catch every single move. All I need is this one little move for me to be good and for me to just get off the screens for the day, and I can have the whole rest of the day to do whatever I want. Controlling your emotion while trading fair value gaps. You must have your stop loss and price target set before the trade is even put on. This is the biggest thing, guys. Do not enter a trade based off of your emotions. I remember when I first started trading, I'd be like, "Oh, this looks good. Like this is going to break out right here. I think we're going to move to the upside." And I just enter in a trade. I have no price target, no stop loss. And then I'd end up being down like 50% on an option contract when I used to trade options, and I just let it go because I'd be like, "Oh, it'll bounce. You know, it'll bounce." And it never fucking bounces. Before you even enter a trade, you must have a plan and you must follow it. You must have your price target and your stop loss set. Stick to your plan and only execute when your stop or your price target is hit. When you sit there and watch them move, you'll start to second guess your bias and start to think it will reverse on you. Follow your plan and let the trade play out. This was my biggest problem when I first started trading, is I would enter in a position, I'd let my emotions take over, and right when I saw a bounce and go against me and I'd be down a little bit, I'd be like, "Oh, I got to cut it here. I got to cut it here. Like, it's going to keep going up. It's going to keep going up." Like, if I'm in a short position and I think it's going to keep going up, right when I sell, of course, what do you think happens? It goes right back in my favor because I let my emotions take over and I didn't follow my plan. I didn't let my price target hit. I didn't let my stop loss get hit. I just sold it because I was too afraid. I was too afraid. If you're finding yourself being emotional when you're trading, lower your position size. If you're not used to seeing your P&L fluctuate in such high levels, if you're going, one tick up is, you're down $100, then you're down $200, and you're not used to seeing this type of money going up and down, guys, lower your position size and focus on consistent trades, and then you can up your position size. Don't focus on making money when we first start trading. Focus on the process, not the profits. Learn the actual craft and the art of trading before you put money into the game. Because if you don't do that and you start putting money into the game early on without actually understanding what you're doing, you're going to lose it. Without a doubt. I had never been more certain in my life because it happens to everybody and it happened to me countless times. Trading is not an easy thing. And it is something you have to be super, super disciplined about. You must follow your rules and you must have a plan when entering your trades. Getting over your emotion takes time. It does take time. It'll take a lot of time. But you can exponentially improve this curve. Your growth curve can exponentially increase if you're focused on making good trades and not making money. And if you're focused on losing money, if you're afraid to lose money, you're going to end up losing money. It's all psychological. Example right here, that same trade we took, right? This would have been me. This would have been me like a couple years ago. Enter short right here. We come back up, right? My stop loss is not hit. I wouldn't even have taken profit right here. This is nowhere I would be greedy. I wouldn't even take profit here. I'd still be in my full position. Oh no, it's definitely going to break high and stop me out. I'm just going to sell the position because it's going to pop, right? We're coming up almost to my price target point here. My stop loss is about to be hit. Super strong buying pressure. I'm like, oh, I'm gonna get hit. I'm just gonna sell my position here, just for it to sell off to new lows, right? Same thing here. Come up, enter short, enter short. My stop loss is not hit. Oh no, it's pushing up. I'm gonna sell before I get stopped, just for it to then sell off to hit my price target. Do not let your emotions take over. The market does whatever it wants. You have to learn that, or you're gonna learn it the hard way. The market is unpredictable. That is why you have to define your edge and follow it. 7 principles of consistency, guys. If you want to be a profitable and consistent trader, these are the 7 things I think are the most important. I objectively identify my edge. What is my edge? What do I trade off of? What gives me an advantage over other people in the market? Number 1, I know that most of my trades are off of fair value gaps. I know I trade a lot of supply and demand zones. And I use order flow as one of my main major advantages over other traders. I use Bookmap and I use level 2 and time and sales to understand strict volume that is coming in that very second when I'm taking a trade. And I'm a scalper. I take advantage of short intraday moves. I objectively define my edge, and I know going into the market, I know what works for me and how I'm going to use it to my advantage. Next thing, I predefine the risk of every trade. Just like we said earlier, know your stop loss and price target before entering the trade. Stick to your plan and don't break it. When you enter a trade without a plan, you end up letting your losers run, creating huge losses that will wipe out your account. This is what a lot of new traders struggle with. They have super small wins and huge losses because they're not following proper risk management. They're, oh, I think it's going to bounce. Oh, I think it's going to bounce. It's going to go back in my favor. And then they keep averaging down on that position until their account is zero, worthless. Follow your risk management and predefine the risk before entering a trade. Before you even enter, have that plan in your head. Know exactly where your stop loss is, know where your price target is, and follow it. Don't hesitate. If your price target's hit, take it off. If your stop's hit, take it off. Simple. It seems simple to say, but actually following it takes a lot of hard work in building up the discipline to be able to come in every single day and repeat, and follow your rules. Because there can be one day, all it takes is one day, guys. One single day that you can come into the market and you're not following your rules and you're not feeling too well, and you know what, fuck it, I'm just going to up my size today. And you up your size and you don't follow your rules, and you wipe out weeks, if not months, of your gains. And you just wipe it out. You must follow and be disciplined enough to follow your rules every single day that you come into the market. 3, I completely accept the risk, or I am willing to let go of the trade. What does this mean? Every trade that you enter, you have to accept the risk that you're putting on. If you go in, with $1,000 and you know that you're risking $200 to make, let's say, $500, that's like almost pretty much a 2.5 RR, right? That's a good trade. But you have to accept the risk you're putting on. You have to accept that you can lose $200 here. It might not happen. You might win, but you might not. So you have to accept the risk that you're putting on the table with your trade. If you're constantly having the fear of losing, you will lose. You must accept the risk that you put on the table. If you are not comfortable with the size you're putting on, lower it. Guys, lower your size and become consistent first before upping your size. What is really hard, and I hate in the community today, is we have we've just overstimulated new traders. The fact that we're promising all of these profits when it takes time, guys. Focus on the process. All of these traders that do small account challenges with no risk management, trying to, quadruple or 5x an account in like a week, guys, that's not how it works. If you try to do that, you're most likely going to lose. Focus on winning trades and focus on trading as a long-term game. It is a longevity game. It doesn't matter what happens today. It doesn't matter what happens tomorrow. As long as you're learning every single day and you're pushing every single day to become better, you will find that over a period of time, you will exponentially improve. But you have to keep focused on what is good habits. Build good habits. Do not focus on the money. That's why every time in my live trades, if we take a loss, right? If we take a loss, it's fine. We move on from it. We learn from it. Because that doesn't signify anything. It is a long-term game that you must focus on. And I accept that risk before I even enter the trade. The next thing, I act on my edge without reservation or hesitation. That's what we said earlier, guys. How do you know whether to act, or how do you know which fair value gap to enter off of, right? Number one, it takes experience. Number one, you're adding more things to add conviction onto your trade, right? I want to see ES and NQ align. I want to see break of structure. I want to see more volume come in. I want to see bookmap start showing me something, right? But when it happens and then when it's right in front of my eyes, all of these things click in my head where I know this is my edge. And if I see it in front of me, I have no hesitation to act on that play. And if I get stopped out, That's fine, because I know that I'm building good habits, and I know that that is my edge, and I know it works for me in the long run. You have to think off of statistics. We're here to build good habits, and sometimes losing is still building good habits. That's when I say we have to think of trading as a long-term game, because one day is not gonna signify anything in your journey unless you're not following proper risk management. Because if you're not following proper risk management, then that one day could be a huge impact of your journey, because you can end up losing a shit ton of money if you're not following your rules. So I enter with my edge without hesitation. When you see your edge present itself, you automatically know your setup and should not hesitate to take the trade. You cannot go into a trade with fear of losing. Sometimes you will lose. You must keep it small, learn from it, and move on. Guys, and if you do not catch your entry, do not chase. There are plenty of opportunities. If you end up chasing a play, your risk to reward is going to be skewed, which means I'm risking a one-to-one trade, which is not something we should be taking. And maybe it's even less than that. Maybe you're risking 0.5 or 0.2 to lose 1. That means I'm risking $1,000 to make $200. Who in their right mind would do that? That is how you become unprofitable. Focus on risk to reward. If your entry is missed or it's not given, there is no reason for you to take that trade. Number 5, I pay myself as the market makes money available to me. Do not let greed take over your trading. This is another big thing for beginner traders. If it is a big enough win for you to feel like you need to screenshot it, sell it. That is what has always been in my head. And that is something that I've been told when I first started trading. If you feel the need to screenshot your profits, take off. Take off the trade. Sell it. If your price target is hit, that's it. Let it go. Do not think about it again. Journal it. Jot down what you did right and what was wrong. But don't look back at it and look at how much you could have made, right? All of the times where people are like, oh my God, if I held, like, I would have made like this much money. I would have made so much money. And so what then happens is they create a false reality inside of their head where they think that that is a normal thing that's going to happen. So they end up creating bad habits from thinking of the money that they could have made from a trade. It is all mindset in the way that you think about your trading. If you look at your trade and are like, wow, like I followed my rules, you know, I made great money. I'm happy with the profits I made. You know, that is the right way of thinking. You know, you're building good habits. You know you followed your rules. You know you followed your price target. That is an exceptional trade. Done. Boom. Over. Journal it. Move on. Next, something else. Now, another trader would think about the complete opposite. They'd take the exact same trade, same stop loss, same price target, and they sell at the same time. But their mindset is, oh shit, you know, it went so, like, I could have made so much more money if I just kept that trade going, you know? Like, look at the chart. It just went like tripled. I would have made like triple or quadruple the money I just made right now. So then they go into their next trade with that exact same mentality. Their price target gets hit, and they're like, you know what? I'm going to let this run. Like, I'm going to let this run, you know? And then it ends up flipping on them, and it goes right through their stop loss. And then all of their rules are off the fucking table because they have no clue what to fucking do. Their price target's hit. They realize that they didn't follow their rules. And they're like, oh, fuck, like I should have sold, man. I should have sold. And then their price target gets absolutely blown through, or their stop loss gets blown through. And they're down triple the position of what they should be down. And they have no fucking clue what to do. And they just wait for a bounce, and it never fucking bounces, and their account gets blown. So when I talk about building good habits, I mean building good habits in the sense of your mindset. How are you looking at your trades? Are you being grateful? Are you looking at what is actually right and wrong? Or are you just focused on the money? That's going to differ you from being a successful trader to a not successful trader. Look at the trades that you take. Are you building good habits? Are you following your rules? Or are you just looking at it in a sense of money? That's a fucking huge thing, guys. Huge, huge thing. Knowing when to take profits is a big thing in trading. You must manage greed and take profits when the market gives them. The market will quickly take it back if you don't take advantage of it. Follow your plan. Follow your price targets. 6. I continually monitor my susceptibility for making errors. Guys, as traders, we are constantly improving ourselves. You always have to look for things to learn from to keep you growing as a trader. Markets change, and sometime your edge will disappear. If you're not paying attention to the errors you're making, you will never be able to adapt to the market changes or improve as a trader. That's why I say, journal all of your trades and ask yourself what you did right and wrong. Fix your mistakes. Guys, as traders, if you're not constantly looking for ways to improve, if you're not constantly journaling your trades and telling yourself what you're doing right and what's wrong, you're going to be stuck at a standstill and you're going to be left in the dust because the market is going to change. Markets change over time. And if you're not constantly looking at what's working and what's not working, you're going to fail to adapt to those market changes and you're going to be left behind. As traders, we have to continually monitor every trade that we're making, every thought that we're thinking. Jot it down, journal it, write it down. When you actually write down your thought process, your emotions, you'll realize you become susceptible to actually realizing and noticing those things when you're in a trade. I have over 6 months of a journal lined up from when I started a small account challenge over a year ago. 6 months of every single day, paragraph after paragraphs of every single thought I had during a trade. I would say, okay, it just broke this level. I'm thinking that it might flip right here, but I'm gonna follow my plan and I'm gonna let it play out. People don't realize how much little things as well affect your psychology. Like, I know some traders that trade worse on rainy days. Or I know some traders that trade better on sunny days. It sounds fucking crazy to say. It sounds crazy to say. But it is all psychological. All psychological. If you're thinking about these things and you think like, oh, it's raining, I'm not going to trade well, like all these things, and you get scared, you're going to push yourself to take trades you shouldn't be taking. And you're going to end up losing. So the biggest thing about trading is understanding what works for you and what doesn't work for you. And stick to the things that work for you. Do not let other traders sway your thought process and change the way you trade. Guys, my job as a mentor, as a teacher in this Discord, is to build self-sufficient traders. I am not here for you to copy every single thing I do, because most of the time it will not work for you. I am here to mentor you and help build your own path to success. Every trader is going to be different. Everyone has their own specific edge that fits their personality. That's why there's people that swing trade. They can't handle the stress that comes with what I do. I am a very fast-paced trader, and some people cannot handle that. And if that does not fit your personality, you should not force yourself to be trading that specific edge. Over time, you will start to test certain strategies, and you'll find what works for you. But you have to test it out. Have to test the waters. And you're going to fail a couple times. You're going to fail here and there. But you're going to have to get back up and try again. Try something new. Number 7, I understand the absolute necessity of all of these principles of consistent success. And therefore, I never, ever violate them. Guys, you know the rules you set for yourself. Everybody in this call knows what they should and should not be doing. The hard part is following them. This is why discipline is so important in trading. You must be able to follow these rules day in and day out. Because one day where you break those rules can result in weeks, if not months, of gains being wiped out. Discipline is so important. Control your mind and you will see improvement. That's why when we come into the market and you see on my live trades, there's some days I don't take a single trade. Not a single trade in the day. I'm in the live session for maybe 2 hours and I won't take a single trade. Why is that? Because I have the discipline to sit here in front of the charts and realize and recognize that my edge is not present. So why is there any reason I should be taking a trade if my edge is not present in the market? I know what works for me. I know what doesn't work for me. So why would I trade something that doesn't work for me? The reason people are going to do that is because they have the thought of making money. They don't care what the fuck they trade. As long as they're making green off of it, they have no idea. And that is building bad habits. That's going to stick with them longer. If you think like that way, it's going to take you a lot longer to be profitable because you're constantly thinking about making money and you're building bad habits over time that are just going to keep dragging you down. The day that you realize that you're able to sit in front of a screen and not take a single trade is the day where you should pat yourself on the back and say, you know what? I did fucking great today. Because not a lot of people can do that. Not a lot of people can sit in front of a screen for 2 hours, 3 hours, and not take a single trade. Have the discipline to know that their edge is not present. So why is there a necessity for them to trade, right? A lot of new traders, they have an itch to put on a trade. They're like, oh fuck, like I'm gonna miss out on this trade. Like it's gonna keep going up. Like I need to enter. They have the constant idea and constant thought that they need to be making money every single second of the fucking day. The more you grow as a trader, the more you realize that the less time is more. The less you trade is more. I used to take like 10, 15 trades a day. There's no need for you to be taking that many trades a day. Now I normally take 1 to 4, 1 to 3 trades a day. If not, maybe even 0 trades if my edge is not there. You must think of trading as a defensive game as well. Protect your capital. It's a business. Your trading should be looked at as a business. Why would you put money and invest your money into something that you think is not going to work out for you? Simple as that. And again, you know that you need to be following these rules. The hard part is actually following them. So it's building up discipline over time. These things will help improve your trading. You're going to grow. It's going to be hard. You're going to struggle. There's going to be days where you're going to break your rules and you're going to lose money and you're going to sit there and curse at yourself and yell at yourself like, what the fuck did I just do? Because trust me, it happened to fucking me. It happened to me multiple times when I first started trading. I know what I need to be doing and I break it. Right after that loss, reality hits you hard and you're like, what the fuck did I just do? And you have you're just lost. You're just lost in thought. You fucking hate yourself. And then you have the worst day of your life. You go to school all pissed off and shit, you treat people like shit, you're just mad at yourself because you didn't follow your rules. It's happened to me, guys. It has happened to me. But I'm here to show you that if you put the work in and the first step is realizing that these things are even happening. If you know that this is something that's bad, fix it. Fucking fix it. And if you're doing something to try to fix it and it's not working, find something else. That's why I preach trading is a lifestyle. If you are not working on self-improvement and self-discipline outside of trading, you will not be disciplined inside of trading. If you're not showing up, you're not getting your work done on time. You're not going to the gym every day. You're not doing the shit that you know needs to get done. You know it needs to get done, but you're not doing it. You're cheating yourself. You're straight up fucking cheating yourself. And you should take it fucking personally. You should take it personally. Because you're the one that's bringing yourself down. Nobody is going to make this work except for you. Trading is one of the only career choices and one of the only jobs in the world where it is you versus yourself. But that's what makes it so fucking great. I have grown so much as a person from trading because you're left alone with your own thoughts and your own emotions, and you have to deal with it and overcome it. And it takes time. It takes time. But if you have the constant push and constant need for improvement and you want to keep going and you get back up every time you fail, you will get to the point of consistency and profitability. But you have to keep working and you have to keep pushing yourself. That's all I have for you guys tonight. Any questions? We'll open up for a question time.
Yo, so I was at a family lunch today, right? And there was some family there, and someone had mentioned like, oh, what do you want to do in your order? And I was like, I don't know. I mean, I like mentioned trading, right? And I kind of got ridiculed for it. Like, I'm right now at least I'm pretty passionate about trading. Is it like a real job that is like viable? Like, would it work out as an adult? If you were good at it.
I have been asked this You're bringing so much nostalgia back to me because I went through the exact same shit when I first started trading. I told my
Just think
parents,
about it. Where else can you make $500 within 30 seconds?
Yeah, but
guys.
where else can you lose $500?
Exactly,
I don't know.
exactly. Guys. Let me say this. When I first started trading, I had every single person in my life down me. Not a single fucking person in my life said you could make this work. I told my mom, I told my dad that I wanted to be a trader, day trader. They said, "Are you fucking crazy?" I said, are you actually fucking serious?" And the hardest thing is losing money when you first start, and your parents going up to you and say, "I fucking told you not to do this," and you kept losing money, and you have to overcome that feeling, and you have to show up for yourself. That's the biggest thing, because trading is a single player fucking game, and if you're not the one that's going to motivate yourself and push yourself to see improvement, it's not going to happen. You cannot rely on anybody else in your life to motivate you to do or improve on your trading. To answer your question, yes, trading can change your fucking life, but it can ruin it. And if you're not going to put in the work to beat every single motherfucker out there, then you're not going to be successful. You have to want it. You have to want it bad. And you have to want it more than anybody else. And you have to want it more than yourself, because it's a single player game. It's you versus yourself. Once you come to the realization that nobody there, it's only you that's going to make this work. Not anybody else, only you. There's going to be people that doubt you. Don't let them affect you. Keep pushing.
Thank you.
Yeah.
Is this your this is your main job, right? Like do you have any other hustles that you do?
So, trading right now is my only source of income. I just quit my job recently that I worked at a restaurant.
Congratulations.
Thank you, brother.
Shit, man.
But guys, I'm a full-time student as well in college.
So,
Yeah.
so I have a question. I apologize.
Yeah,
But
what's up, man?
how do you know what stocks to trade on? Do you trade with the same exact stocks every day?
Yes.
Or like weekly
Yes.
or monthly? You trade
Yeah.
with the same one?
I only trade ES and NQ futures, guys. When you first start trading, you're like trying to juggle all of these different tickers at once. Like you're trying to trade every single thing you see. Focus on one thing and watch it every single day. Trade it every single day, because you get familiar with the price action. You get familiar with how it moves. The only thing that you need to make money is one ticker, one thing that you're consistent with, that you just know how it moves. You don't need to trade every single ticker in the game. I only trade ES and NQ.
So what do you think are good stocks for a beginner to trade?
I don't trade stocks. I strictly trade futures. I only trade ES and NQ. I trade the S&P 500 future, and I trade the Nasdaq futures.
Oh, okay.
Mhm.
If
Yo,
I could,
also, oh, sorry.
go ahead.
So I just switched over to futures, and I haven't made my first trade yet on futures, but on Tradeovate, I see that there's a ask button and a bid button. I don't know what those do.
Yeah.
Do you?
So join, guys. This is something important you need to understand if you're going to start getting into trading. And there's a video. If you guys go to the free education section in the Discord, there's a lot of videos that'll help you understand what that means, right? Understand what a bid and what an ask is, right? This goes back to auction market theory. When someone says, you're bidding on something, that's exactly what it means, right? You're putting an order in at the bid versus what an ask is. So it's just kind of like a limit order. Think of it as a limit order. You're putting it in at what people are bidding for it, and you're putting it in what people are asking for actual price. So it's a little bit of a spread, but the spread is not much. When I enter my trades, though, I trade only off market orders. I don't care. I just enter in market.
For your charts I did during the slides, can you post them somewhere so we can refer back to them?
This whole session is going to be recorded. So if you want to go back, you can go back in the recording.
Oh, okay, all right, thank you.
Yeah, of course.
What are futures?
So futures are it's kind of crazy because I didn't realize how little people knew about futures. So I bet most of you know what options are. If you're in here and you're into the trading game, most of you probably know what options are, right? Futures are like the godsend of like what you think was impossible for you to be possibly trading, right? With options, you know, you have to deal with the Greeks, you know, you have to deal with time decay, you know, implied volatility, you have to deal with premiums being pumped and dropped. All of these things that create options hard to trade because you have to time it, right? You have to time the you have to take into account all these things, you know. With futures, it is strictly moved off of a tick basis. Price only moves off of price action. So the contract that you're trading is not something that can be pumped or it can be dumped. There is no time decay. There is no expiration date. You are strictly trading off of price action. So futures are basically what people think. So when you think of, you know, future, what's going to happen next is basically what it's saying. And it is the S&P 500 futures. So futures are basically contracts that says you think it's going to do, you know, this in the future, right? It's kind of like an option, but it's not. When you're trading the futures of the S&P 500, you're trading the actual contract, which is ES. ES is the contract. So you're buying ES on margin or leverage or whatever you're trading for then, if you're longing it, you know, you want it to go up. If you're shorting it, you want it to go down, basically.
And is futures also available on like brokers like Webull and stuff like that?
I do not think futures are available on Webull, no.
No, they're not.
Negative.
What brokers do you guys use?
I use TradeOvate and NinjaTrader. We have a broker setup video in the Discord. So there's a whole video that explains how to set up TradeOvate.
All right, thank you.
Is one singular Nasdaq a contract $20? Like
No.
a micro?
A micro? No. NQ will be around $80 to or $100. Micro NQ will be $100. Mini NQ will be $1,000. ES mini will be 500. Micro E mini will be 50.
I bet. Thanks.
Yeah, I
For
was
your
just about to
stop.
ask that. Sorry.
No,
No, you good. You can go.
All right. So I was gonna ask the same thing. So when I'm trading the micro e-mini, when I click like one contract and I click buy, that's only using $50, right?
Yes.
All right.
No, wait, are you saying mini or micro?
Micro.
Yeah, micro 50.
All right.
Wait, I got a question. So, what would be the initial capital you would have to require to trade futures?
Good question. So it depends on the broker, but I recommend that if you're going to trade futures, I recommend that you have at least $1,000. But again, I want you to be trading micro contracts. I do not want you to touch mini contracts because mini contracts are going to be 10 times the size of a micro contract. So if you're trading on a $1,000 account, focus on trading micros, 1 to 2 micros, and just focus on having consistent trades.
All right, appreciate that.
Yeah.
For your stop losses, do you get? Oh my bad.
I have a question. Like, how do you take like 3 or 4 contracts at the same time when you're in live or?
Are you saying how do I enter in 3 contracts at like one time?
Yeah.
So on your broker, you can just put in the amount of contracts you want to buy. Like if I'm on a broker, I'll put in, let's say I want to instead of 1 contract, I'll just type in 3 contracts. So when I click buy, it'll buy 3 contracts. But most of the time I don't do that. I normally have 1 contract on my active trader, my DOM, which is what I trade off of. So when I want to enter in, I'll just press the button how many ever times I want to enter, right? So if I want to buy 3 contracts, I'll do boop, 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 and it'll click, and I'll enter into 3 contracts.
Okay.
Yep. Yeah, no problem.
He's always talking about it's better to scale in too.
Yeah, exactly. So I always have 1 contract in, so then I can always add to my position. I can always enter in 1, then add another one, then add another one. You know, more confirmation gives me. So then my entry and my my risk is then going to be more defined.
For your stop losses, do you wait for the candle to close above your mental level, or what if you get wicked out?
Yeah, good question. So the way I think about it is I can always get back into a position. With futures, you know, there's no like PDT rule or there's nothing. You can just get right back in. So follow your rules. If you get stopped out, right? I normally want to see a break. If it comes up and like touches it and it wicks down, I'm not going to exit. But if I see a break of it, then I'll exit. But again, I can always get back in, because if it breaks my level and then wicks down and I see more confirmation, I can always get back into that position, right?
Yeah, that's a good way to put it. Thank you.
Yeah.
Do futures have buying power?
No.
Okay, so if I bought something, then sold it, and I
You
only
can
get like
instantly get back in.
$100 in my dang, as many times as I want.
Yep.
But it's
Dang.
good.
But you're going to
at-
take commissions, though.
Yeah.
So every time you're entering and exiting a contract, you're paying fees.
Oh, okay.
I'll catch you in the morning, Justin. Peace.
Later, brother.
Wait, so when you're doing like micro and you're doing like a $50 contract, let's
Yeah.
say you do one, do you get liquidated once it goes, let's say, in the opposite direction of $50 or whatever the ticks?
If you lose more than your account, then yes.
I see. Okay, so it's whatever is in your account, it can
Yeah.
go up to that.
Yeah.
Okay.
Wait, so what's the best way I can build my technical analysis skills?
I recommend just going to, past days. If you don't trade on the day, look back at the market, draw in, what you want to trade off of, draw in your zones, you draw in your fair value gaps, look how you possibly could have played those trades, stuff like that, right? Think about, where would you have entered, where would your stop loss be, where would your price target be, and just kind of mark in those things on your past charts.
So do you recommend starting off with like 1 to 2 contracts then?
Yes, I 1 to 2 micro contracts.
Micro, yeah.
Yes, 1 to 2,
Okay.
because then you can learn how to scale into a position, right? You enter one contract, get more confirmation, add another one, and then you can scale out as well.
Makes sense.
Do you have any advice for options trading? Stop trading options. That's my advice. Guys, options are great. Can I be unmuted? Yeah, yeah. Guys, options are good, but futures are just so much better, in my opinion. It's so much easier to define your risk and really understand what you're trading. All right, you should be unmuted, brother.
What you think is like the worst thing about options compared to futures when
Time
it comes to
decay.
a beginner?
Time decay. Having to worry about, especially new traders are constantly trading 0 DTE contracts, right? Like, one little move against you can automatically dump the contract because of the implied volatility and the time decay. So with futures, you don't have to worry about that. You can strictly worry about the specific trade that you're taking.
I have another question.
Yeah.
So on Thinkorswim, could you trade future contracts?
You can trade futures on Thinkorswim, but the fees are really bad on Thinkorswim.
Oh shit. What do you recommend for a broker?
I recommend Tradeovate or NinjaTrader.
All right, appreciate that.
Yeah. Any other questions?
Is there a course to any of this in any of your chats or anything like that?
One more time.
Is there a course to any of this that you have in any of your chats?
Yeah, good question. So we have a lot of educational content in the free education. I'm personally in the process of making a full A to Z futures course right now. It's in the making right now. For those who don't know, we are going to be going paid after this week. This last week is going to be the last week that we're going to be free. We've been free for this last week will be a month free. So I wanted to, give everyone the opportunity to see what we offer, and I want to show everybody who I am and what I want to really do for this community. And then after the free month, we will be transferring paid, and the program and the futures course will be released in the next coming weeks.
What would the pricing be to be in the server once you go paid?
It'll be $70 a month.
Cool.
And it's crazy. It's funny too, because the people that come to me and say it's outrageously spending, show me another server that does what I do. I'm here to strictly show you guys my thought process every single day live in front of your face. There's no way I can possibly, cheat or do anything. Like every single trade, I'm here to really build self-sufficient traders. I care about every single person in this Discord because I was that guy that nobody believed in, nobody had faith in. I was losing money. I was literally rock bottom at a point in my trading career. And I had nobody that would take the time to teach me, the literal proper way to trade. I spent money on courses and Discords, but all of those Discords did would just give me alerts. They didn't care about if I was losing or winning. They didn't care about building good habits for traders. They didn't care about making self-sufficient traders. All they cared about was, making money off subscriptions. All I want to do for you guys is show you how to build good habits and actually trade the proper way. Following proper risk management, following proper discipline. We're not here to make, 400% option gains. Oh my God. Like, that's bullshit. Complete bullshit that is showing a complete lie. Complete lies to your face. I want to build something very, very special here, and me and Cheyenne have a lot of plans for the future with this Discord, and I'm putting my entire life and my every hour of the day into working on something to improve this Discord. So I'm super excited for the future of yours.
Really appreciate that, bro.
Of course, brother.
Hey, Justin, I'm really new to trading. So
yeah.
I was looking at your past recordings. Do you use they're usually like a green rectangle. Is that your fair value gap?
Yes. Or it's so, it's not always a fair value gap, but most of the time when you see like that, it will be a fair value gap. But learn to recognize what a fair value gap is on your own. Like, you should be able to see what my green box is looking at, and you should be able to define it by yourself what a fair value gap is, right? I want you guys to not just look at what I'm doing and copy me, but understand what I'm drawing in, why I'm drawing it in, right? Why I'm taking that specific trade. But yeah, most of the time it will be a fair value gap.
And does that make like a range? Because I know that there's one on the top and the bottom. Is that like a range you use?
I'm confused on the question. Are you talking about like the top and bottom of the fair value gap?
Yeah.
That's the range of the fair value gap that we can potentially play off of. Any other questions, guys?
Yeah, I have one more. Where are you gonna post it? Is it gonna be in the Discord?
Yeah, I'll post it on the Discord. I gotta upload it to YouTube, and then I'll post it in the Discord. Yeah,
appreciate it.
Of course.
Yo, Justin, are you pursuing this in school? Are you gonna join a trading firm ever in the future? Or?
That's actually a great question. I've thought about it. Currently, right now, I'm a full-time student. I honestly don't know how long that's gonna last. I really want to stay in school and get my degree. I want to get an MBA, and I'm eventually trying to transfer to I've made some good connections through family, and so I know people at Ivy League schools that I potentially want to get my master's done there. But if I I'm making good money from trading right now. So it's just having to. I don't need to stay in college, but I want to for the connections and for. There's multiple things that go into it, but.
Yeah, facts. No, good on you.
Yeah.
So I'm a student too. Like, how do you switch between like school and like classes? Do you like customize your schedule to the trading hours?
Yep.
Or market
time management, bro. I do a lot in my life. I run this whole Discord. I create content for you guys. I plan everything out for you guys. I grew this. I post content to grow the Discord, grow a following. I take 5 credits or 15 credits. So I'm taking 5 classes, hard, 8 in classes for my major that take a lot of time. I work out every day. I get all the work I need to do on time. It's all about being disciplined. It's being able to control your time and recognize, when you're doing something that you is like wasting time. It's good to take breaks, right? It's good to have some days or off days, where you can just do what you want and chill around. But right when it's over, you need to bust your ass and get back on what you need to be doing, and you know what you need to be doing. So just do it, and it's going to transfer over to your trading as well. For those of you who saw that TikTok I posted the other day, I talk about how important it is to correlate every aspect of your life when it comes to trading. Like if you're not disciplined outside of trading, you're not going to be disciplined inside trading. And especially when you start improving every aspect of your life, you're going to realize that every single thing is going to improve exponentially. Your mental health, how you feel, your emotions during trading, your trading will improve. Everything will improve. Level up as a person, not just in trading. Level up in all aspects of your life. Any other questions, guys?
Thank you, bro. Appreciate it.
Of course, boys. All right, I think I'll end the session here. I hope you guys really did learn something from this. My whole goal is to give you guys quality content and give you guys and teach off of my experiences, so you guys don't have to deal with what I had to deal with, which is just trial and error. I want to really be here, a mentor for you guys. If anybody has questions, feel free to DM me, at me in the Discord. I'll always be here to help out if you want to, go over charts, anything. The recording will be posted tonight. I'll upload it right now. And I hope you guys have a great rest of your day. And I will see you tomorrow morning for a live trading session on Monday. So have a great rest of your day, guys.